Good morning and happy Friday to you all. We are the Investing Bros and we're about to have a great show. A lot of interesting stuff to talk about today because I kid you not just 15 minutes ago, there was actually more of a bullish feel that we were going to go with for the show, but PCE numbers came out this morning. I guess it was more like 30 minutes ago because PCE came out at 8:30 and shifted everything. And actually, we're going to be talking about a lot because a story I was going to talk about today and kind of talk about why this could be bullish. With this new update to the PCE numbers, the exact same story could explain a bearish outlook for Bitcoin. I'm not ready to throw in the towel just yet. That's not completely over, but the things are starting to stack up that the bears are slowly but surely gaining back control. Make sure you don't go anywhere, though, because it's going to be a very, very, very good show. But it's Fridays too. So, last day of the week, we got to keep things positive, even if Bitcoin goes down negative. A lot of things look on the charts, look in the news. T-Shroom, how are you doing this morning though?
Better than I deserve, Tim.
Yeah. Yep.
Much better than I deserve. And thank you guys for tuning in to the behind the scenes show that we just ended. We do that every Friday morning, for our members of the Discord. And I had a lot of fun, and I apologize for accidentally ending that early and without saying goodbye. Sorry, guys.
Yeah, I literally, and for our before, this is for all of our gold and diamond members in our Discord and our Patreon. So I keep talking to them, and T-Shroom's like, Tim, you realize we're not live anymore, right? And I was like, we didn't even say goodbye, and he's like, yeah, just it is what it is. So and that right there, T-Shroom, is why I think you're not doing as well as we thought you would in this poll this morning. I'm very surprised. If you guys have not voted on this just yet, I want to reflect back on it towards the end of the show. We only have 25 votes in right now, despite the fact that we have almost 50 people watching. So go vote on it. But who wins in a race? T-Shroom, and I could have put hopped up on coffee, but there's only so many characters you can put on there. With 3 cups of coffee, T-Shroom with 3 cups of coffee. It's a pretty formidable foe right there. I mean, T-Shroom on 3 cups of coffee.
Yeah. It's a belly full of coffee, though. That could be debilitating.
Yeah, it's fuel for you though.
Fuel?
Okay. And or Biden on a bike, and it started off really well. Like mostly for a while, you were 100%, but we're sitting at 72% T-Shroom. So people are not just beaming with confidence for you as much as I thought they would. Yes, still you have more, but we'll see. We'll see how the show ends.
It's important to have fun, Tim, but unfortunately, this morning we have to cover the PCE print, which is not fun. I want to go ahead and give it to you up front in the morning because this just printed here at 8:30 a.m. Core PCE year over year for January. The actual print was 4.7, forecasted at 4.3, and the previous was 4.4. So to my knowledge, Tim, correct me if I'm wrong, this is the first inflation print that we've seen since the tip top of the CPI at 9.1. That printed higher than the previous. Is that correct?
I don't remember. I think so, but I don't remember for certain. What makes this more significant is the PCE is the one that the Fed actually looks at more.
Yeah.
Everyone loves the CPI. It is important, but it's the PCE that really packs the punch when it comes to the FOMC meetings. And so, of course, something we're going to be monitoring today. Go to my screen here really quickly. Just this morning, and I'll hit refresh on this, but you guys see right now we're sitting at 32% at a 50 basis point, only 67% saying 25 basis points. Let's refresh this and take another look at it staying the same. This morning when we started show planning, this was down at 27%, 50 basis points. So it's already picking up some steam. Again, got a lot of work to do. We have still 26 days, but that, to be fair, 26 days is more than enough time for this to start shifting. And I'm going to talk about this a little bit later. We're going to come back to this chart a little later, but I want to kind of even look into the future. We did that a little bit yesterday, but we'll take another look again because this is some big news popping up from PCE. So Teacher, did we skip the quote of the day?
We didn't skip it. I just thought it was important to get to the PCE.
Yes, true.
And we'll break that down a little more. One note of optimism here is what you'll notice, especially about Jerome Powell, but the Fed more generally. Once they get into a new number, they usually don't stop unless there's a lot of reason to stop. What do I mean by that? So 75 basis points, once they got into that, they chugged through, 4 hikes in a row that were 75, something like that. And then when that went down to 50, they only went down.
I think 375s and then a 50.
375s, a 50, and now down to 25. So I think in Jerome's head, he has always been accounting for an uptick in inflation, right? So I think that I don't think he's going to stop here and go back to 50 in what's the next one in March, right? So I think he's gonna.
Well, this one's in March and in May.
Right.
Yeah.
I think he's gonna wait. I don't think they're gonna hike 50 basis points in March, even if we get another. There is one more CPI print before the decision. Even if that one comes in hot, which I don't think it will. I think that one usually is usually less hawk. It's not as bad usually. If CPI comes in good, PCE still has a chance of coming in bad. If it comes in
gooder,
exactly.
If it comes in gooder, we're good.
So I think the Fed, even with this data, is unlikely to go back up to 50 because it makes them look shaky. It makes them look like they don't really have a plan and they're just going with the wind of inflation. Now, if CPI comes in and misses by a long shot, then that could be bad, and then Jerome may have an argument for going back up to 50. All right, let's get into our quote of the day because we did skip it because we had some pretty big news there. If PCE hadn't missed, then we probably wouldn't have covered it as extensively. But we did get a surprising miss there. So, quote of the day: in the absence of the gold standard, there is no way to protect savings from confiscation through inflation. There is no safe store of value. Now, this was said quite a while ago by Alan Greenspan, born March 6, 1926, in the middle of the Great Depression, is an American economist who served as the 13th chairman of the Federal Reserve from 1987 to 2006 under George Bush when he was finishing up with that. And this quote I pulled up was important because, well, obviously Bitcoin didn't exist back then, and there's no way he could have known that Bitcoin would exist. I wonder what Greenspan would say about Bitcoin today. I wonder if I think he's still alive, actually. I wonder if he has issued any thoughts on Bitcoin, because reading this quote, you can see that he definitely valued gold, the gold standard, and as a good store of value.
Yeah.
So anyway, that's our inflation related quote of the day, and a little bit of a trip down memory lane to learn a little bit about Alan Greenspan, 13th federal chairman.
Sounds like a good guy.
Yes.
Wish he was still with us.
I think he is still with us.
You think so?
Well, because on Wikipedia, usually it says when he died, and he is not. There is no death date. So,
well, I mean, theoretically speaking, he'd be 97 years old this year, so he could be alive still.
He could still be alive.
I wish he was still with us in terms of being in the Fed.
Right.
So he's retired. More than likely. I guess I don't know that fact either. Is he still working for the Fed?
No.
Yeah,
he has his own private consultancy, but he's probably fully retired.
I was going to say 97 years old. If he is still actively consulting people at 97 years old, I want to be that guy when I grow up.
Yeah, he's still alive, and he started a consultancy. Probably doesn't still operate it. I would imagine. Maybe just takes board meetings every once in a while.
Yeah, maybe.
Yeah.
Well, let's get to we're running behind, but because we kind of went a little out of order, we kind of broke one of the big story, and that story's gonna be big because we're kind of reference that story throughout the rest of the show. So covering that early was good. Let's engage with chat here just a second, and we'll jump into TA. I saw a name, and I don't want to take away. I'm gonna say the first commenter first because he deserves it, and that's Yair Navarro. Yair Navarro, 2 days in a row, just absolutely crushing it. First comment of the day. He deserves all the praise. Kelly Kellum is in chat. I'm jumping the ship here, but shout out to Kelly Kellum. Love you. Should we sing the Kelly Kellum song, or do we have time for it?
We do not.
We don't have time
to skip the Kelly Kellum song.
So if we get 100 likes, we'll sing the Kelly Kellum song at the end of the show. Let's see who else is here, though. Yair Navarro was first. A mellow fellow is in here. Mr. Bitcoin is here. Crypto Trades. Let's see who else. CBD Suddy is here. Trevor. It's love to see you, Trevor, with the GM. See some people still throwing in the vehicles. People, big supporters of General Motors. Listen, if they're going to keep saying GM, then I'm going to keep making the joke. It's just one of those things. CBD Study said Beamer must be free. Investing Bros needs a mascot. Well, he's on the thumbnail today, so he did make a special appearance on the thumbnail. Maybe he'll make a special appearance on the show. He's outside guarding the door. I can see his shadow underneath the door.
Yeah.
So he is he's doing his job.
He's generally a good boy.
Who else is here this morning? Army Piper is here. One of our moderators. Mike Play is here. Who else? A lot of Cryptex is here in the building. Henry C. Hernandez, Joe Watkins, Justin Eubanks. Jeep Girl is here. Welcome, Jeep Girl. I think that's the first time I've gotten to read her name, so that's awesome. Seeing new faces in here. Who else? Bruno. Ooh, Wandu Gomez.
Tough. That's a tough one.
Onedo or Wandu? I don't know. Gregory Grezik is here. Crypto Ben Franklin is here. Tyler Main is here. Steve Shrum is here. Grand Roofing Incorporated is here. A couple more, and then we'll kind of transition. Crypto AI, Crimson Caravan Company, Tarsum, Alton Hernandez. How to say Hernandez? Wow. Alton Henderson. Very different name.
I did that too when you were gone.
Very different name. Hernandez and Henderson. So that is my bad. The always very beautiful Taylor Warren is in chat, which I'm very surprised how she's in chat while she's educating the youths.
The Utes?
The youths. How those youths doing? Josh Denham is here. And look at one more, and then we'll move on. Elo Brown. Big shout out to Elo Brown. If I did not read your name, it does not mean I don't love you. It just means we are behind, and it is time to jump in and do some technical analysis. Let's go ahead and go to my screen here, T-Shroom. And this is not a chart, in case you guys, well, it is a chart. It's not a technical analysis chart.
It is.
It's a technical analysis chart?
It's technically analysis.
It's technically analysis. You were right about that, T-Shroom. It is not TradingView. Can we agree on that? This is not a TradingView account. Okay, good. Glad to know. This is the CME
It
futures.
is the view of trading, of CME trading.
All right. Well, now we're getting really into the weeds on technicalities here. So here's what we're currently looking at right now. So as we speak right now, the interest rates that the Fed has for us, we're sitting between 450 and 475. All right. So 4.5 and 4.75, but we're going to go ahead and say 450 and 475. 67% are still saying March, we're going to be getting another 25 basis point hike. And I kind of misspoke yesterday because I think I misunderstood what T-Shirt was asking me. So we're going to go through the next couple of months what we're looking at. A little bit of a spoiler. We have been told to this point by Jerome Powell, the goal is to get to 5.1, which means 500 to 525. So this 25 basis point hike would get us 25 basis points away from that goal, okay? So if we get 50, we hit the goal he talks about. He has mentioned before. Whether he updates that in the future, we'll have to see. But 25 would keep us 25 basis points away. So in May, we're looking at a 63% chance that we're going to get that other 25. So 25 in March, the next 25 in May. And as it stands right now, that is what Jerome Powell has told us is the target to get the interest rate up to. 34% chance to say they do 50 in May. Again, high, but we'll have to see. We'll have to wait on that one. Let's move into June. So we should pause at this point, right? Well, in June, CME is not Jerome Powell. The CME, this futures prediction tool, they are not them. They're saying another 25, 53% chance that we get another 25 basis points up to 525 to 550. So they are anticipating in June, they're anticipating that Jerome Powell is going to come and update this and say 5.1 is not high enough. We need to go higher. Maybe 5.3, maybe 5.4, something like that. Get us into that 525 to 550 roll. Let's take a look at what they think about July. In July, for the first time, they think that they pause rates. So 46% is saying nothing. So we get 25 in March, 25 in May, 25 in June. And then finally, July of 2023, after over a year of interest rate hikes, they finally pause. September is saying a 45% chance they stay paused. We're not cutting just yet, but we're not adding in September. November, it's going to be a 42% chance that we stay put. No more ads. We don't stay, we're not going to cut at this point. And December, let's take a look. This morning, it's shifting. So earlier this morning, it said December was the first time they were going to have cuts. And to be fair, this is really close, 31% to 35%. But this morning, it was 34% saying they were going to cut by 25 basis points and 30% saying that they were going to stay still at 525 to 550. Well, after the PCE numbers came out, now it's coming out, again, slim margin. We got a lot of time before this happens, but 35% is already predicting that we don't see another cut the rest of 2023. This is going to be really important because this is a complete shift in thought that a lot of people thought later this year. A lot of people thought that, hey, we're going to get to the 5.1 like Jerome Powell says. We'll be good. And then later this year, maybe November or December, we're going to start cutting. It is shifting this morning. It is looking like the Fed is going to be forced to not be able to do that, especially with other news that broke today. We're not going to cover this later, but there's news that broke this morning that we're sending an additional $10 billion here in the U.S. We're sending $10 billion to Ukraine. So that's, I think, bringing us up to a total, I think if the article was correct that I was reading, $200 billion of U.S. taxpayer money is going to the war in Ukraine. I'm not going to get too much in the weeds of that. Just want to update you guys on what that information is. It's really hard for Jerome Powell and the Fed to tackle inflation when the U.S. government is needing to pay this exorbitant amount of money, and so they have to turn the printers back on. So it's almost like we're just straight taking the money, we're printing it and putting it straight into the shredder, and it's nothing beneficial is happening for the U.S. citizens. Do with that information what you will.
Yeah.
Let's transition here and let's take a look at the chart. And I'm going to kind of I told you guys, the reason I wanted to cover that is because it changes the narratives and stories that I'm going to talk about even while I'm doing technical analysis. But let's just take a look at the chart.
Really quick before you do that, just my 2 cents is, again, I will stick to my guns even after looking at that, at those charts, which I think you did a really good job on that, Tim. If I'm Jerome, I still don't do 50 basis points in March. What I do is I do 25, right? But I come out hawkish. I give that hawkish press conference that I didn't do in February, right? I come out hawkish. I say, look, inflation's a little stickier than we thought. Okay. We're not seeing the disinflation that we've seen in previous months. We're going to have to do this longer than maybe what we were thinking before. So longer, not higher in March. That's my analysis.
Yeah, and that's what, to be fair, that's what the tool is saying too. Not a single one of them predicts. It gives some of them predict it, but no highest percentage of votes is going towards a 50 basis point hike at any point this year. It's saying 4 more 25s: March, March, May, June, and July. Or no, I think just 3 more. 3 more, and then July is the first time it pauses. So that's the kind of thing right here. It's technically only predicting 25 more basis points than what Jerome Powell said. So wait here in March. We're going to find out in March if Jerome Powell's going to update that plot to give us that. But let's go over to Bitcoin. Let's actually go to the Trading View technical analysis chart.
Let's do it.
Which is what we traditionally talk about when we do technical analysis. But to be fair, T-Shirt makes a good point. There's a lot of things that can fit into technical analysis. There's an updated little support level I did draw this morning. Keep you guys posted on this one. We're hovering at the bottom level of it again. So, are we going to bounce right here? The fact that we haven't just smashed through it is a decent sign this morning. But of course, with this bearish news that we're getting from PCE, I have a couple thoughts here. Realistically, we should shoot down. Like, this is bearish news. This is going to put pressure on Jerome Powell to come out a little bit more hawkish, even with a 25 basis point rate hike. That's going to happen more than likely. But I think he's going to come out and say, guys, inflation is not doing what we thought. It's getting back out of control. We might have to get more aggressive and raise by an additional 25 basis points when we thought we'd only have to go to 5.1. I digress with that. Here's the one thing I will say. While this makes sense to be bearish, and I'm going to talk about how bearish it is, and right now I'm leaning bearish, guys. I'm going to be honest with you guys. I have shifted after this news came out. I'm leaning bearish. This would not be the first time, though, that it seems like a very obvious thing that should push us to one direction. We see the charts actually go the opposite direction. So I'm saying that, go back to my screen right here, T-Shroom. Don't be surprised. I'm not saying bet on this. I'm not saying enter a bunch of longs right now. Absolutely not. But I also won't be surprised if for some reason we end up bouncing and going back up to 25. I do think this news is enough that all the people saying 30,000 for Bitcoin here over the next couple of weeks, I'm sorry, I don't think so. I think 30,000 is out the window. I even think getting up to 28 is going to be hard. I think a revisiting of 25.2 is very possible. I even think breaking through it and maybe getting somewhere closer to 26, maybe even up towards 27 is possible. And I know it's going to be a little, some people are going to say, well, Tim, isn't it just going to be an easy climb? Well, guess what? When you're looking at the fixed range volume profile, this is what a lot of analysts have been talking about. And the reason for the 28K prediction or higher is because of the just there's just no volume in here between 25.4 and all the way up here towards 27.7. But even when you can kind of stretch it up here towards 28, 28.7, 28.4, somewhere in that region. With there being bearish pressure, just because there's no volume does not mean bears couldn't decide to make a stand somewhere here in the middle. So I can't give you a perfect spot where in this because there's just no volume. But if we do start to rally bullish, what you kind of see this happening is it's like a form of manipulation where the whales and the smart money and the fantastic traders that are out there, they understand, hey, this is bearish news. We're in a bearish scenario. But since everyone else is thinking bearish, they're going to pump the market. They're going to pump the price, make you, the retail investor, second guess yourself. They're going to get you to buy in somewhere here north of 25,400. That's when they flip the script and they let the market actually crash back down in anticipation of a very hawkish FOMC meeting. So again, while this news is bearish and could and should take us to the downside, don't be surprised if there's manipulation in the field that pumps us to the upside first. Even when you come over here, we're looking at some things that we have just on the charts. These are charts. This is not the news. Here on the hourly chart, chart prime is showing we're actually sitting on a discount zone. We're overextended. The last signal we really got was oversold over here. We're below the equilibrium level, obviously, because we're sitting on discount, the discount zone. We are curling over with the hourly chart of our dynamic reactor, but this is sitting more in a bullish spot. We also got the constriction of our reversal zones kind of leading towards a big breakout. We've been talking about that for a while. 4-hourly chart, we're going to see a kind of a similar thing with the resistance levels. We're not sitting on our discount, but we are sitting on top of an equilibrium. So we got our premium kind of resistance levels up here. We have our equilibrium discounts all the way down here at 21,300 or so. But keep an eye out there. We could bounce right here off our dynamic reactor. This is a little strong level of support. And our predictive ranges, we're sitting at the moment in the exact middle of them. On that equilibrium, right on the blue level, which is the middle point. This is the exact middle of what it's saying we could bounce to. This is kind of bullish. And guess what we have here? Oscillators. We just flashed oversold here a couple of days ago on the 4-hourly chart. The daily chart isn't as bullish on chart prime. So this is where we're sitting a lot closer. We did reject at our premium levels once it loads up here for us. Second, yeah, we rejected on our premium. We are still constricting with our reversal zones, but we got a long way down, all the way down here. The dynamic reactor is sitting at 19,800. The equilibrium, the top level of it, sitting here at just about 21,000. Daily chart is showing we could come down this far, but those smaller ones on chart prime are definitely saying, hey, we are sitting on some support. And it's not paying attention to the news is necessarily, it's paying attention to what's been happening more recently over the last couple of days. 4-hourly and hourly are looking more bearish. Going over to traditional TA, let's take a look at some other things over here. If we do fall, I do want to kind of set the precedence for this. If we do fall and start to head down, I have these levels I've been talking about, but let's even kind of back that up. Let's look at Fibonacci. Let's look on a shorter timeline, go to the 4-hourly chart and go to this bottom we had back here, back on the 13th of February, and we'll go all the way, and we had this flat top, so we'll go to those tops. What are we keeping an eye on for here? The log chart and the linear chart aren't that different. I'm keeping my eye on this golden pocket here on 22.7, 22.8 log chart. It's the exact same thing, so it doesn't really matter which one you're looking at. It does matter when you start. I'm going to keep it on the log chart. It does matter when you kind of stretch this out. Let's kind of take a look at a longer timeline. Let's go back to the bottom of the bear market so far. Again, I'm not necessarily thinking this dip is a guarantee we're going to reset new bottoms, but it's always a chance. Let's take a look at this, what we have going on right here. There's some levels that kind of correspond with the zones that we're talking about right here, but keep an eye on 0.236 level. This is a very simple level for us to climb back down to. This would put us down at 22.5, super close to that 22.7 golden pocket in a shorter timeline. So I'm putting a lot of weight, if we break through this blue level especially, that 22.7, 22.6, watch for that very, very, very key zone of first level of support. After that, now we're talking about coming down to 0.382. We're talking about down to 20,000. Another really interesting one is going to be down here around 0.5 in the golden pocket. 18.5 for golden pocket, 19.7 on 0.5, but could we drop a little bit lower and end up filling in that gap? Those of you who don't know what I'm talking about when it comes to the gap, this is the CME futures gap that we have back here in January. It comes all the way down to 19.5, goes all the way up to 20,800, but the top's not as important. A lot of times with these gaps, when you're looking at traditional stocks and trading, we end up coming back to fill them. And while we've expressed the concept of maybe this is one we don't fill, it's towards the bottom. If there's enough bullish pressure, we end up doing something different. But I'm going to get rid of this right now because it's not relevant right now. If we get this bearish pressure, if we get the PCE and people respond to the PCE the way they should, if Jerome Powell and the Fed come out extremely hawkish, we could see a crash all the way down to 19.5, fill that CME gap, still not set a new bottom, but just come back down and regroup. So it's definitely something to keep your eye on here when we're looking at these lower levels. Now, we still have a couple minutes left here in the technical analysis section, and it's a very weird day today because, again, stories heavily impact news. I told you guys there was a story I wanted to bring up that's actually should have been bullish, and the article itself is bullish, but I'm going to kind of pair and think through, especially in light of this PCE news. Now, there's an article on Cointelegraph this morning that says Bitcoin price continues to fall, but derivatives data hints at a short-term rally to 25,000. So, this is bullish. What is it getting into? We're going to look at a couple charts here. Ever since the other day, we bounced off 25.2. We came down. There was a little bit of hesitancy, but when we found support at 23.5, the strength and this chart right here is showing you the longs and how much they're adding to the longs, these futures traders, and their confidence. So this is kind of showing you how much they're leveraging here. There's been a lot of people leveraging and saying they're very certain that we are bottoming out there at 23.5 and the rally will resume. Going down to this other chart, it talks about how when we bounce off 25.2, so this one, you bulls want this red line, orange line to come down. Bears want it to go up. We did start moving up. There was a little bit of concern that came into the space after we rejected 25.2, but ever since we found support again right there at 23.5, the article talks about, we've started to slowly, the bulls are gaining back confidence. So you might be wondering, Tim, why are we talking about the futures contracts? Why are we talking about why this could be bearish for Bitcoin? All right, so you can go in my face for this one. I don't need charts for this. Let's just walk through this. Before the PCE news came out, we just saw people entering with confidence more long positions. Now we have something in here that could push a lot of pressure to the downside, what we call a bull trap. This is how longs get liquidated as well. That's the whole thing. Whenever you see longs or shorts get liquidated, you see massive moves in the opposite directions. What we're seeing is something on the charts have given the long traders a lot of confidence in the space to put a lot of leverage in. Now with this absolute hawkish news, with this PCE number coming higher than what we expected and flipping back to our inflation increasing, that could be all the forces the bears need to rally their troops to short the market, end up liquidating the longs, and not just taking us down to the downside minorly, but getting a really, really good push. Now, I told you in the beginning when I was doing technical analysis, don't be surprised. I'm not predicting this, but do not be surprised if for some weird reason, through the form of manipulation, what some of those traders do is they actually support these longs, let the price pump up above 25.2, and then they enter their shorts, trapping all the retail investors up there, and now we make our big push to the downside. However, all of these things are lining up. 30,000 in my mind. I'm not an expert on this. Obviously, there's other people that know more things than me, but I think the chances of a $30,000 Bitcoin over the next couple of weeks, months, maybe even the rest of this year, depending on what's happening with these inflation numbers, that's not happening anytime soon. Maybe 26,000, maybe 27,000, but even that would be a form of manipulation. I think that we are seeing the signs come back in to revisit 20,000, maybe 19.5, and then you start to open up the possibility, the doors of, is it possible that the bottom is not in? Going back, I want to show one more thing. This is the really important detail that we've been talking about here for a while. Let me take off this Fibonacci level because that's just kind of clouding the space. Yes, we double topped right here. Yes, we got back up. We beat the high that we had back in November. And the other thing that we could do is we could just kind of trickle back down here and hit 21.5 again. That's happened in the past. However, I want to express to you how big it is that we have not broken 25.2 and we have not set a new high here on a more macro trend. This is huge. And unless we can close, and at this point I would say probably spend a couple of weeks above 25.2, there's a chance that the bear market is not officially over and a new bottom is coming in. Now, I don't think those bottoms, I still don't think 10,000. I still think if we're talking about new bottoms, we're looking in the region of 14,000, 14.3. There's a lot of speculation there. There's a lot of opinions there. There's a lot of things there that we can't really know until we get closer to it. But I cannot stress you the importance of bulls trying to reclaim and hold 25.2, and at the moment, I just don't see it happening. Best case scenario, I see a quick shoot up to some levels here in the middle, and then immediately, like a peak that just drops out like crazy, it will fall back down below these levels. Yes, we'll have a wick above these, but we will not have candle body closes on any significant charts. and that will be problematic. I did just see in the comments, we're at 929, so we're about to check out the stock market because it's going to be very interesting how the stock market responds to this PCE news. But we just had someone, let's see who said, Soj Majid said, Tim, look at the Dixie. This was something I was looking at this morning. So here we go. We just broke a level I told you guys keep an eye on. We broke the log chart's 0.382 level. We have not broken. The next level to keep your eyes on is the linear chart's 0.382 level up here at 105. But I was watching, shout out to Tom Crown. We're going to have him hopefully on the show here in the next couple of weeks. But he made a good point that if we cannot hold this 0.382 level, do we potentially run back up to the 0.236, up towards 109, the same peak that we had back in July of 2022? This is also part of that movement. Again, if we get a lot of bearishness, if the FOMC comes out and they're hawkish and they make it very clear we need to be aggressive, watch people stop borrowing money. Watch people actually get more conservative with their spending and the Dixie just take off. Bitcoin and other assets in the risky market, even though we know Bitcoin shouldn't be classified there, it is at this point by a large amount of investors. Watch it potentially have a good crash while the Dixie has a nice climb. So keep your eyes there. We have support. We have resistance above us. It's not time to freak out and lose your head, but it is time to lock in. Keep your eyes on the charts. Keep your eyes on the news. Think with your head. Make sure you're understanding, hey, what can be used as manipulation? So like if we start rallying, I'm telling you right now, if we start rallying, have a little bit of skepticism. Start to wonder what is causing this rally, because right now the facts aren't pointing that direction, and keep your eyes on a good spot to not get duped and faked out by the manipulators. T-Shroom, it is a minute past, so that means the stock market has been open. I need to drink some water because I can feel I'm parched. But there was a lot to talk about there, and I'm glad we got through all that. I'm going to throw it over to you to look at this. If you have comments you want to read in chat, or if you want to just jump right into stocks, I'm going to throw it over to you for now.
All right, yeah, let's go ahead and jump right on into the market open here, guys. And it is what you would have predicted based on everything that Tim just said. The indexes are coming in down sharply, and the NASDAQ is leading the way in selling. So NASDAQ down 1.6%, down, and the Dow Jones down 1.2%. So that tells you that the Dow is getting sold off slightly less than the NASDAQ. People are holding on to security in those industrial names that the Dow Jones just has more weight of. Taking a look at the SPY chart, you can see continuing to flirt on the daily candles with this major line of downtrending support for the SPY. So that is kind of the one to watch. But guys, here zooming out to the 1 week, this is more than likely what is going to occur now, especially if Jerome comes out and makes a claim. Well, you probably get a new formation by the time that he does the press conference at the next FOMC meeting. But look what is just below us here on the weekly candle for the SPY. It is none other than the 200-day moving average, and that would bring us down to 371. That's on the SPY. If I go to the SPX, which is more indicative of what you see on the news, then that would bring us down to 3,700. So could have been an easy conversion there in my head for you guys. But anyway, that's more than likely what we're going to probably see here if the market does start to sell off and move down and try to form a new low. It would be a lower low than what we put in mid-December there. So that's kind of what I'm thinking. You also have the potential for what Tim just said on the SPY. Again, you bounce here, you go higher for exit, for the banks to be able to exit their position, take profit a little higher, and then you come down and touch wherever the simple moving average is by around then. Probably the moving average would come up slightly, so it'd probably be more like 3,760. So that's kind of the analysis there. Just some crude weekly candle analysis there on the SPY. But as of this morning on the daily chart, on our open, we have not broken down through that downtrending line of support. So that is still pretty good. All right, let's move up into energy. Take a look, and this is not what you want to see, guys. With inflation in the headlines, natural gas is coming back up. So could be a potential strategy to buy some of the energy names as a way to hedge against some of this inflation. And hedge against the bearishness of the inflation news and the potential risk to the downside that equities are going to face over the coming days and potentially weeks Oil down 1.5% though. So just natural gas up, but it's up pretty sharply. The futures contracts are up 9%. Goodness. Yeah, that's pretty intense. That can't be right. They're up sharply. I'm not. Maybe it is 9%, but there's a lot of discontinuity there. I mean, it looks like it.
Well, part of the issue is even the gap that it started with. So
yeah,
it had a nice little push to begin.
Yeah. So natural gas definitely looking like it's found a bottom here at $2. That would make sense for the futures contracts on natural gas. The ETF finding a bottom there at $7.21. Back over to oil though. You see oil still playing along. It is putting in higher lows every time, it looks like, except for this second low. So very, very interesting to continue to watch that as it faces some fresh resistance here at 76.28. It's wicked up to that already on this daily candle that we have right now, but it has come all the way back down and is testing a little lower. So oil playing along here, natural gas definitely not so much. All that trickles. Why does that matter? Because that's going to trickle into the next CPI print. It's going to trickle into the continuing inflation prints. Oil, energy prices are a big, big aspect of inflation, guys. So they've been playing along thus far, and hopefully they will continue to do so going forward. Looking across crypto, you're seeing red on the screen other than Optimism. Optimism chain doing really, really well. BNB also clinging to that green status. So that's pretty good. Who's leading the way lower on this watch list? It would be Avalanche. So actually, no. Sorry, Tron. Tron is... Wait. No, it is Atom. Okay, they're changing. There's no point in trying to report on this. It's Atom. Atom is leading lower now. It's not. Okay, so anyway, gold, metals, gold and silver getting sold off here. Silver getting sold off more aggressively than gold, down 1.75%. Let's check in on the charts here for silver. We don't usually do that. Yeah, look at that on the daily chart. Tickling the 200-day moving average, trying to figure out if that's going to be where it wants to make a bounce and a move to the upside. Mm-hmm. And then gold, not anywhere near that 200-day moving average quite yet, but look how much it has descended from that line of support, down uptrending support that it was in that uptrending channel there. It is down almost 4% from that formation up there. So moving on down, it's exactly what you'd expected. Now, guys, I'll go ahead and tell you, I dumped my Tesla today. I dumped it in the pre-market, and I sold it for profit, which was nice. Could have sold it for a lot more profit if I'd sold last week, but now it is down 3.3%. Definitely not any kind of financial advice. I'm just telling you what I did. As a result, pretty much 100% of that PCE print. Nobody was expecting inflation to be as sticky now as it is. That's definitely not what I was expecting. So that is going to be repricing the equities market going forward, and Tesla is not a name that I want to be in here for the next couple days. But could be a good time to buy into it. I'm going to guess, we haven't looked at it yet, but I'm going to guess that the microcap stocks are down even more than the mega cap stocks. So it'll be interesting to see that. Bonds getting sold off as well as those yields come up. I read this morning on Zero Hedge Twitter that the German 10-year bond is actually at a high that it hasn't seen since 2008. So bonds are kind of showing the way forward potentially. We have seen green on the screen for the yields on American bonds for a while, which means that the bond market is just getting sold off. Usually the bond market is wiser than equities, a little more conservative traders there. Dixie, Tim covered that pretty well. Cannabis getting sold off, not a surprise there. And yes, the mid-cap stocks, as I just predicted, are down lower than the mega-cap stocks. Maybe you're not impressed by that. That's okay. Who's leading lowest? It would be Snowflake. Snowflake actually has earnings next week, so that's one to watch. C3.ai not too far behind Snowflake there in its selling off in the early minutes here of the New York session. 9:38 on my screen. You can't see that part, so no use in continuing to look up there. Oil getting sold off too. Oil producers getting sold off here. So that's going to be our market open, but there's one more chart that I wanted to show you guys, and this is the CPI. I do not have PCE brought up because I usually look at CPI. But here's what we're seeing, guys. There was already a slowing disinflation in the last CPI print. So the fact that PCE came in actually higher than previous, the word is sticky, right? Sticky inflation. it's sticking around more than what was anticipated by economists and by, more importantly, the Federal Reserve. So again, this is not PCE, this is CPI. But what has happened here is it's slowed and it has come up, right? So that is not what you want to see. You want to see this number coming straight down and just coming back to 2 and hanging out around 2 and having fun, playing in a happy spring field, right? And that is just not what has happened here, guys. It is ticked up, and so the Fed realizes now that it has more to fight. The fire that they thought they put out has rekindled, and they're having to start up the fire engines and go back and check out the scene and see what they need to do. Do they need to bring out the big full throttle fire hose and start spraying back at the house, or are they going to be fine with just putting some sandbags and having some people check in on it? That's what is going through my mind if I'm Jerome Powell. How big of a situation is this?
Interesting.
Yeah.
Interesting.
So we could go ahead and move into the crypto stories, of which there are many. But what we can do before we get into crypto is go ahead and check out this Reuters article on the PCE. So let's drill into the details here, guys, a little bit. I know you might be tired of listening to PCE coverage because it's bearish, but let's get educated, and let's see what matters here. So the personal consumption expenditure, that's PCE price index, tracked by the Federal Reserve for Monetary Policy, shot up 0.6% last month after gaining 0.2% in December. In the 12 months through January, the PCE price index accelerated 5.4% after rising 5.3% in December. Excluding the volatile food and energy components, the PCE price index increased 0.6% after climbing 0.4% in December. The so-called core PCE price index increased 4.7% on a year-on-year basis in January after advancing 4.6% in December. So Reuters helping us out there with a little bit of a drill down into the details, although I will say that left me wanting quite a bit because I still don't know which components are leading and which ones are lagging. Mm-hmm. So we'll do some digging on that, and we'll get into it tomorrow. Let's get into the crypto news here, guys. Australia's finance regulator opens targeted review into Binance. Right, so that's not great to hear. Although I will say that Australia probably does not command that big of a percentage of Binance trading. So, but they were actually, I remember this now. Binance, Australia's SEC. So I don't know what it's called and what their acronym is, but their SEC actually had an ongoing investigation into FTX long before it announced that it was bankrupt and people found out that it was corrupt and mismanaging funds. So Australia is definitely a big name in my mind in terms of not sold out exchange commissions internationally. So they're looking into Binance. As you guys will remember, after FTX fell, Binance came under fire about their reserves, and they also became under investigation by the US SEC. So this is not a bullish headline by any means, but just trying to bring it to your attention. We'll keep moving. U.S. Drug Enforcement Agency seized $1.8 million from Binance in 2022. So Binance getting another headline here, although this is not their fault. This is just the Drug Enforcement Agency being able to extract some money from the illicit trade of drugs there, selling narcotics in Michigan to Mexico via stable coins. So some clampdowns there. SBF facing multiple fraud conspiracy charges in unsealed superseded indictment. The indictment unsealed in the U.S. District Court in Manhattan, where SBF was originally charged, includes a total of 12 charges, 4 of which are new. Let's see if there's any details here that we can find out. The new indictment charged SBF with securities fraud, wire fraud, multiple counts of conspiracy related to committing wire fraud in Alameda's lenders and FTX customers, money laundering, operating an unlicensed money transmitting business, bank fraud, and illegal campaign contributions. He has pled not guilty to these charges. So, is this really anything new? Not a ton new here. This is kind of what you would expect, but these are technically new charges. So, new charges, pretty much the same ballpark. Let's see. SBF and his associates made over 300 political donations totaling tens of millions of dollars that were unlawful because they were made in the name of a straw donor or paid for with corporate funds. So looks like we're getting some more new details there, but for the most part, this is all kind of stuff that we know here in the crypto space. So not really shedding too much light on what this might have for our portfolio. So we'll keep moving. Montana Senate passes bill protecting crypto miners. Okay, so the Midwest, what is Montana and Wyoming considered the Midwest, or is that the West?
No, that's not Midwest. That's West. Midwest would be like Minnesota, Wisconsin,
Nebraska, Chicago. I understand what
Chicago's not a state.
Chicago. Well,
it's in
I
Illinois.
didn't say it was a state.
Well, but we were naming states, and then you just say Chicago.
Is there really anything in Illinois other than Chicago?
I just want to point out that I think there's a probably 67% chance that when you said Chicago, you thought you were saying a state.
No, I know that Chicago is not a state.
We were listing states.
Okay, where was Abraham Lincoln from? He was from Illinois, right? Yeah. Where was he from in Illinois?
I actually know this. Wow, not important, but it's really hurting my brain that it's like I know this trivia, and someone's gonna put it. Gosh,
Lorry County, Kentucky. What? Okay.
What did you put?
Where was Lincoln from? Son of Kentucky foreman. I thought he was from Illinois. All right, let's move on.
Yeah, let's keep moving.
Let's move on. So Montana has passed this bill. The Montana State Senate passes a bill on Thursday protecting crypto miners from a range of possible actions against the industry. The proposed law in the Senate and next will go to the State House for its approval. The bill protects at-home mining, prevents discriminatory utility rates for miners, and stipulates that crypto used as payments will not be subject to additional taxes. That's pretty cool. So the Midwest, or the West, as Tim likes to say correctly,
as Tim likes to say,
is continuing in the path of pro crypto legalization. Pro-crypto legislation, excuse me. The IMF is weighing in. They say no crypto as legal tender, and community disagrees. A community member believes that the space will look back to this moment once it succeeds in making the world decentralized. Okay. The executive board of the IMF recently endorsed a crypto asset policy framework that included not granting crypto assets on official currency or legal tender status. The executives agreed with the framework and highlighted that it's necessary to move to safeguard monetary stability. So interesting. And then Dennis Parker on Twitter said this is the best Bitcoin promotion. So that is true. I think that the IMF and the BIS, the Bank of International Settlements, they are really, really, really messed up. They don't get it. They don't get crypto, and it's actually, you know what? I think they really understand crypto. They understand that it's a threat, and that's why they're having to fire and levy all these lambasts, right? All of these insults at crypto and saying that it shouldn't be legal tender here in the United States. The IMF has been outspoken about legal tender. About Bitcoin becoming legal tender in El Salvador, where it was passed. And, they said, hey, we don't like that. We're not going to give you guys relief aid as much. And I think they walked that back. But the IMF has been pretty outspoken. Yeah. We'll keep moving here.
I did find out about Lincoln, by the way.
Okay. What you got?
So this was what threw us off. He was born in Hodgenville, Kentucky.
Okay.
The issue is that he moved to Illinois in New Salem. So he grew up, like he was born in Kentucky, grew up in Illinois. That's where he did first serve in politics in Illinois. So that's what threw us off there.
Yeah.
But he never moved to the great state of Chicago.
Yeah.
Didn't really get the chance to visit them, but
Yeah, it's rough. John Kahn said T-Shroom needs remedial training in 3rd grade geography. Yeah. And that one hurts because I do try to be as geographically educated and savvy as I can be, but I did get that one wrong.
Hey, listen, I still think you would beat, if you had 3 cups of coffee, I still think you beat Joe Biden on the bike. So
would I beat Joe Biden in a geographical debate?
I
or geographical
absolutely
competition?
you would. Absolutely you would.
Yeah. This morning has been tough. If you guys tuned in the behind the scenes, my brain has been firing at a reduced amount of cylinders. So
it's like the Michael Scott. My mind's going a mile an hour. Not fast, huh?
Yeah. So we've got one more story here, and this is pretty much the biggest one of the day, in my opinion. Tokens of optimism ecosystem surge as Coinbase unveils its layer 2 base. So let's drill into the details here, because this one's pretty good. Coinbase is publicly traded on the New York Stock Exchange, by the way, so you might want to buy the dip here. Might is a big word. Might.
Yeah, that's true. On
Thursday, announced an Ethereum scaling product that will leverage Layer 2 Network's Optimism technology. Optimism OP token has jumped over 10%, reaching a 2-week high of $3.10, CoinDesk's data shows. Coinbase launched the testnet version of its new Ethereum Layer 2 scaling product Base. Base is the name of the product, so their name is Coinbase of the company. The product is called Base, announcing that it will be interoperable with other chains like Solana, but won't have its native token. Interesting. Base aims to be decentralized, permissionless, and open to anyone with the vision of creating a standard modular roll-up agnostic superchain powered by Optimism, the exchange said. We're joining Optimism as a core dev on this open source OP stack and working to create a thriving community of other developers. The speculation on crypto Twitter is that Coinbase is making a KYC-based DeFi protocol with the help of Optimism, which will open doors for institutional participation in democratized finance. What do you think, Tim? Do you think this is a good overall?
Yeah.
Do you think this is the right move by Coinbase?
But here's the thing to keep in mind about these pieces of news. In a different area, this would be very bullish, and in terms of the price action. You got to keep in mind, there's two different types of bullish action. Some is price action, and some is just overall development for the company itself. Even if we don't see the increase in price action on Coinbase's stocks, this does not mean this doesn't add confidence to it long term. It might take a small dip because the rest of the space is being hammered, but maybe we see Coinbase not take as much of a slide as some others. And then down the road, as we start to see all the development and how all the productivity that this relationship has, that's when the real bullish nature comes back into price.
Yeah. No, I agree. I generally agree with that. We had one more story. Let me see if I can find it.
I will say we're 18 likes away.
18
from a Beamer appearance and a rendition of the old Kelly Kellum song. I do need to say spoilers. It's not like it's like the greatest, most creative song in the world.
That's
it's
right.
just we really like it, and it's the classic Kelly Kellum song. So if you want to hear it, there's 18 of you that have not. I mean, we got 120, almost 130 people watching.
Yeah.
Only 82 likes, so easily that number could get above 100. So it's not like we're asking for an impossible task here.
Might need to start tuning the old vocal cords.
Yeah. Yes.
Yeah, I was in theater in high school. Guys, we got one more story here. The story is why Nigerians aren't turning to the eNaira despite crippling cash shortages. So for those of you who don't know, Nigeria has been ahead of the e-payments curve for a long time. I think even before crypto, they had like their equivalent of Venmo for a long time that you could send money via SMS text messages. Wow. That never happened in the United States, pretty much never. And but they've always been ahead. There's been a lot of countries that are way ahead of the United States in e-payments and just better payments. But now they took a turn for the worst, which is the Nigerian CBDC, and they've called it the eNaira, and they're having some trouble with it, right? With it getting adopted. A lack of infrastructure, merchants, and interest may all be contributing factors to Nigeria's low eNaira pickup, despite its recent cash issues. So there's some folks in Nigeria, none of them using the eNaira. Presumably that's why this picture was used for this article. Nigeria is struggling. The digital iteration of the Naira issued by the Central Bank of Nigeria in October 2021 hasn't had the most impressive start, and adoption has been slow. But even if people in Nigeria wanted to turn to the eNaira, transaction options with the central bank digital currency CBDC are still limited. They want to put it out there to get people to use it, but people don't have enough places to use it, said Nigerian-born Adesaji Solank, a director of Renaissance Capital, an emerging and frontier markets focused investment bank that also has branches in Nigeria. I actually know about that bank. They have a really big IPO ETF, which if those acronyms don't mean anything to you, I'm sorry about that. IPO ETF.
At least you apologized about it.
Right.
Yeah.
There may be a dearth. You don't see that word a lot. I almost thought it said deaf. There may be a dearth of merchants willing to accept the eNaira, according to London-based Varun Paul, CBDC's and market infrastructure director at institutional crypto custody platform Fireblocks. Okay, that exists. Paul, who previously worked at the Bank of England, okay, that makes sense, as an economist and head of its fintech hub, is now leading Fireblocks' effort to build out infrastructure for CBDC integration. So you have this chicken and egg problem, he said. Yeah, so he's kind of the one to watch there. I think we covered him. I've heard that name before, Varun Paul, and I feel like I remember the Fireblocks too, that there was a guy who worked at the Bank of England, went into the private sector to found his own consultancy, and now he's going around the world helping countries enslave their population with a CBDC. So not good. Cash shortage, yes. And Nigeria has been having issues with their paper currency, and that's why they've come out with the eNaira. But more than likely, it's just a cover-up for a failing economy or corruption. But Nigeria is actually one of the leading, by GDP, one of the leading countries in Africa. I think South Africa's up there, Mauritius, and in Nigeria doing pretty well. So what do you think, Tim? Do you think that this is going to be kind of indicative of overall global CBDC rollouts? What I'm worried about here is that the West is going to learn lessons from this. So like countries like Germany, America, the UK may actually learn lessons from this and be able to have more infrastructure in place before they issue their e-dollar or e-Deutschmark, right? So this could be a bad thing. I mean, overall, right now, it's a terrible thing for the Nigerian government, who are trying to have some success with the CBDC. More than likely, they aren't thinking about it super maliciously, like a world government like the United States would. More world influential government, I should say. But it's not good. I mean, it's not good for the people of Nigeria, but I think it's not good because it's giving governments data on CBDCs. It's good for organizations like Fireblocks, led by former Bank of England employees, who just want to see CBDCs run the world. It's good for them because they're getting data. They're getting data on, this is basically a beta CBDC. Now, I know that there's other ones in China, but Nigeria is way more like the rest of the world than China is, because China is a communist country, and the people there just have a different mindset towards life, towards value, towards exchange and trade. Or at least they're taught to and conditioned to think that way. They're just humans like everybody else. It's not the people that are the problem. It's the conditioning in the government. But Nigeria is a much more free and open economy. Yes, they have a corrupt government, and they do have a lot of issues in their economy. But this is a lot better of a test subject, I'd say Nigeria is. So the world is getting a lot of data. The IMF, the BIS, the Bank of International Settlements, are getting a lot of data here from the major issues that Nigeria is having with their eNaira. So is this a good thing in the sense that like the governments are seeing, oh, maybe this CBDC thing is dumb, it's only working in China, so we shouldn't do it? Or do you think the governments are actually taking this data and they're going to be able to use it for bad?
The first thing is the government's going to do whatever it wants to do in all of the places. I know you talk about the corruption of Nigeria, but let's be very honest. Give me a country not named Chicago that doesn't have a corrupt government in some form or another.
I think Estonia's government is pretty rock solid.
I have no knowledge of Estonia's government whatsoever, so maybe that checks out. I don't know.
But your point is
my
good.
point is that all governments are corrupt in some way or another. This is my concern. I would love to say that the reason why this is failing is because people realize how terrible CBDCs are. And there are probably a good amount of people in Nigeria that do know that and are staying away from them because of that reason. But let's be real. The main reason CBDCs are failing is not because people think that they're evil. It's new technology.
Mhm.
People are very resistant to change. It's going to be a whole process to get people using any type of blockchain technology, even the government's version of it, CBDCs.
Mm-hmm.
So I don't think that this is a failure for them just yet. I think that there's going to need to be some mass education going on. I mean, obviously El Salvador saw what was happening with that. They're still working on it. We need to check up on them. How is El Salvador doing with their transition to Bitcoin being legal tender there?
Mm-hmm.
But that's going to be a battle all over the world, and it's not going to be a battle of good versus evil in blockchain technology. It's going to be a battle of technology. Do people want to adopt the new technology?
Yeah.
It is 9:59, and we are sitting at 102 likes, T-Shroom. And so we have two things that we need to deliver.
Let's do
on.
it.
The Kelly Kellum song and hashtag free Beamer. So I think we'll sing the song without Beamer.
Mm-hmm.
And then we'll bring Beamer in to close out the show.
And
again, I told you, it's not a
two.
glorious song, but it's simple and it's beautiful in its simplicity.
And a 1, and a 2, and a 1, 2, 3, 4.
Kelly Kellum, 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 Kelly Kellum. There we go.
And scene.
End scene.
Love it. You gonna get Beamer?
I'm getting Beamer. He's ready. He's out there barking.
He's a Borkster.
He knows. He heard the message that he's being freed. So here we go.
He's a Borkster. Guys, I'm going on a cruise. While Tim goes and gets Beamer, I'm going to tell you guys about how excited I am for my cruise. I have bought 3 Hawaiian shirts, one of which Amanda got me, and it was really good. I might wear a Hawaiian shirt tomorrow on the show. Tomorrow on Saturday. On Monday for the show. We will see. Here comes Beamer. Oh, he's such a good boy. And I'm excited for the cruise. I am going on a cruise, and here's Tim, and there is Beamer. Oh, the Beamski.
So he sees himself. Beamer, do you have anything to say to the people again?
He went like right to the mic. That was pretty cool.
He's not a dumber.
Yeah.
He is heavy.
Unfortunately, he's too smart for his own good, and he keeps trying to escape the backyard and getting himself into trouble. Beamer.
He's trying to get to the people, is what he's trying to do.
Who's a good boy?
Well, that is all we have for you guys in this episode. It is Friday, so this is the last one of the week, but we love all of you. You guys have a great weekend. Hashtag free Beamer. It's taking over the internet. Keep it going. Love you guys. See you on Monday.